Hi, I'm John Ross. It is Tuesday, February 19th, and the U.S. stock market has been on an incredible run. The S&P 500 is up more than double digits year to date, and it has now retaken its 200-day moving average. Now, the 200-day moving average is a very critical psychological and technical level for traders and for investors. And the fact that we've seen such a remarkable run to get us back to this point suggests we might see resistance come into play. We might see some selling pressure on the S&P 500, on U.S. stocks. And what I want to know is what type of sell-off we might see and what might help support U.S. stocks if they are to resume this rally and push to new highs for the year and new all-time highs before this year is over. Now, there's one asset in particular that I like to monitor because it has some pretty good-sized influence on the broad stock market and specifically on the stocks that I like to follow. Now, those stocks are natural resources and commodities and basic materials stocks. And the asset that I'm talking about is the US dollar. So to give you an idea of what we should expect from the US dollar in the coming days and weeks, I want to show you two charts. And with that, hopefully it'll give us some bearing about what to expect from the broad stock market and from natural resource stocks in the months ahead. So here we go. Check out these two charts. This first chart is a chart of the US dollar index weekly. So it's a bigger picture view, and it goes back to the early part of 2016. You can see where the US dollar index topped out at the very end of 2016. You can see where it bottomed out at the very beginning of 2018. And you can see that it's trading now in the early months of 2019 near a very important high that it made at the end of last year. So to get kind of an idea of, the US dollar's rally last year and whether or not it can continue this year, I want to look at what it retraced of the decline we saw in 2017. And to do that, I would use a basic Fibonacci retracement tool, and I would draw from the high to the bottom of where the primary downward thrust came in this sell-off in the US dollar, which is somewhere around 89 on the US dollar index. And based on the price action and the pattern and where we're trading now, it's right around a 61.8% retracement of that decline, which comes in right around the 96 level on the US dollar index. Now, again, this is a basic retracement tool, and a 61.8% Fibonacci retracement is very commonly used retracement level by traders and investors, so it has sort of a self-fulfilling prophecy kind of use to it. So it's one of the key levels that I like to watch to kind of try to determine when maybe a retracement has exhausted itself and we might see some type of change in direction for prices. So if this indeed does come to represent key resistance from an intermediate to longer term basis for the US dollar, then we could be seeing some type of maybe a 5% decline, an initial decline of 5% on the US dollar index in the months ahead. And then the way I get to that 5% is by using, again, a typical retracement level of the rally we've seen through last year and into this year. So here, check this out. I will draw in now a retracement on the upward thrust. Again, going back to that low we marked as the end of that downward thrust in the dollar, using that as the bottom and then the high last year as the top, we would see a 61.8% retracement of that rally coming in right around 92. Now, and from current levels, a move to 92 would take the US dollar index down by somewhere in the ballpark of 4.5%. Let me just slide that over so you can see it. So a 4.5% decline from here, that would take it through some key support levels, and it seems to be a pretty natural, logical downside target for the US dollar. Now, again, this is a weekly chart, which gives us a little bit of a bigger picture view. Let's switch over to a daily chart to get an idea of why we might see some selling in the very near term and might sort of kind of begin this 5% decline that we're looking for. This is a daily chart of the US dollar index, and I really just want to highlight the last 3 bars. Let's go back to Friday's bar first. That bar is considered a key day reversal bar or a bearish reversal bar, and that's because it made a new high intraday and then reversed all the gains and ended up closing at a lower level than the previous day's close. And that came at a pretty important new high level for the dollar index. So if you look over to today's bar, this again is another intraday reversal bar in that it made a new high higher than the previous day's high and is now on the verge of closing much lower than its high and lower than the low from yesterday's bar. So these 2 bars together suggest we could see some additional follow-through selling on the US dollar that could again begin what would become a much larger sell-off in the US dollar. Now, I put an initial target at a 5% decline on the US dollar, and that's a relatively big move in the world of currencies, in the world of foreign exchange. I wrote an article in Winning Investor Daily at the beginning of this year, and it talked about, it may have been the end of last year, but it talked about how a 1% sell-off in the US dollar supports the stock market by about 2 to 3%. So if we were to see a 5% decline in the US dollar in the next couple of months, that could lead conceivably to a double-digit gain in the US stock market. And now when it comes to natural resources and similar stocks, they feel an even bigger boost from a decline in the value of the US dollar. Whereas the broad market might feel a 2 to 3% boost, the natural resources and commodities and material stocks, they'll tend to see something like a 3 to 5% boost. That includes energy stocks as well. Energy stocks are among the biggest beneficiaries of a sell-off in the US dollar. So even though we are at a very critical resistance level in the S&P 500 and for kind of the broad market, we might see a correction, or maybe we see just some type of sideways consolidation. And this sell-off on the US dollar, if it materializes as I think it can, could become a new catalyst that drives the market higher. So looking specifically at natural resources and basic material stocks, a lot of the names that I follow, the technical patterns are very bullish. It looks like we're seeing the very beginnings of a new breakout in a lot of those stocks. So, this US dollar move could really, benefit these stocks and really create a lot of great buying opportunities, not just in the couple days and weeks ahead, but even as we make our way through the first half of this year. So I hope this idea is something that you might be able to kind of wrap your head around and use in your own trading and your own positioning in this market to kind of give you some bearings about how to react if we do see some type of sell-off in the stock market in the very near future. But with that said, I'll continue to monitor this. Thank you for listening, and we'll talk soon.